Today's video is all about one of the most controversial real estate tools that has ever been invented. And that tool is the HELOC. And for those of you that don't already know, that stands for Home Equity Line of Credit. But first, this is the first video after the Fraser Valley Real Estate Board's most recent stats release. And that means that this is the Surrey Report. So before we get into unlocking the equity in your home for the purpose of frivolous spending, here is my team with the most recent City of Surrey housing prices.
Moving into our detached market, we had a total of 431 sales last month. That is down from 715 sales in the same period last year. Our benchmark price is $1,851,600. That is up 4.4% month over month and 38.5% year over year.
Our townhouse benchmark price is $935,200. That is a 5.1% month over month increase and a very substantial 43.4% increase year over year.
And in condos, benchmark price is around $580,000. Now that's a 4.4% increase month over month and a 36.1% increase year over year.
All right, thanks team. And before we get into it, if you find any of this information here today helpful, please remember that you can unlock the equity in the like button for the YouTube algorithm. On this channel, I do 3 videos every single week in regards to Surrey, BC, and Canadian real estate. So please feel free to subscribe if you don't want to miss the next video. And I would love to have you join this community of like-minded Canadians looking to build wealth through real estate. And now with that said, let's talk HELOC.
What, are we rhyming now?
A home equity line of credit is an amazing tool that you can use to unlock the equity tied up in your home that you have earned just through owning your principal residence. Basically, this is a mortgage that you can draw from or pay down without being stuck with static payments that only seem to leave you tied with your hands behind your back when wanting to access the capital that you have both paid off and acquired as a result of the appreciation that your home has seen during the time that you have owned it. You see, a regular mortgage is composed of 2 parts. The principal portion of your mortgage, which goes towards the amount you owe and helps you pay down the debt, and the interest portion, which is the fee that you pay for the privilege of borrowing money and putting a roof over top of your kids' heads. Well, a HELOC works a little different. A home equity line is most often completely flexible, meaning that you can usually borrow more money off of it or pay it down faster depending on your needs at the time. This is fantastic because each time you find yourself a little bit short on cash or have a fantastic opportunity that requires capital, you don't have to go back to your bank to beg and plead for a loan. On top of all that, when that amazing investment or opportunity pays off, or you get a large cash injection from that long lost uncle that you didn't even know you had, you can pay off as much or as little of your line of credit as you wish at that time without the prepayment penalties that you would normally get from a regular mortgage. And getting back to the payment, normally a home equity line will only actually require that you pay the interest each month. And if you have something like I do, which is a Manulife One, you can actually let that interest accrue on top of the amount that you owe without paying anything. Meaning that if home sales seem to dry up because nobody has booked a call with me right now down below in the description with just a few simple clicks to talk to me about listing their home, I don't necessarily have to make a payment on my mortgage this month, giving me the freedom to not have to worry about bills on a daily, weekly, or monthly basis. But before you go and think,
wow, this HELOC thing sounds amazing. I'm gonna contact my mortgage broker right now to get access to this amazing product.
I want you to know that there are some downsides. First, most HELOCs will not allow you to borrow to your limit. A regular mortgage here in Canada allows you to borrow somewhere between 80 and 95% of the value of the home that you're purchasing. HELOCs are most often restricted to 65%, and they're usually much harder to qualify for than a regular mortgage. Next, I want to warn you of this. Before you go getting a bank card that is quite literally tied to the equity that is safely locked in the foundation of the home that you own. Yes, something like a Manulife One actually has a bank card tied to the equity of your home, but most banks will make it a little bit more difficult to access that cash. You better make sure you don't have a spending problem. Now that the equity in your home is so readily available and easy to spend, you have to make sure that you don't just start spending on things like vacations, vehicles, RVs, or other depreciating assets. In fact, my mortgage broker specifically told me this when I applied for a HELOC. There are 2 possible or probable outcomes for you when you secure this type of mortgage. The most common situation is that people start spending frivolously. Since you now have access to all of that equity that is tied up in your home, most people start to get a spending habit. And on top of that, if you do have the type of HELOC that allows you to just continually add those interest payments on top of the principal amount that you already owe without making a minimum payment, well, often people end up in trouble and they do it very, very quickly. Let's say you took out a HELOC for $350,000 because your home is worth $500K, but you only had an opening balance on that loan of $200,000, meaning you have $150,000 of room to spend. Many people immediately just start to let that interest accrue on top, as much as $700 a month at 3.5% or more. And after 5 years, you haven't spent any money frivolously, but you do owe $40,000 more than you did just 5 years previous. And that's if you didn't spend the other $150,000 that you had access to help buy that cabin on the lake. But if you would have taken a regular mortgage at that exact same time with the same interest rate and just made your regular payments, after the exact same 5 years, you would now owe less than $180,000 on your home. And this points out that for most people, a regular mortgage is actually the better tool to help them create wealth over time. But there is a less common result of a home equity line that my mortgage broker also wanted to warn me about. And that situation or result is the one that I found myself in. You see, by nature, I'm a saver, and when given the opportunity, I take every single penny that I possibly can, and I put it against the principal that I owe on the HELOC. Because something about watching the balance on my HELOC go down is just absolutely satisfying to me. Almost as satisfying as watching this. So every spare penny I have, I put towards the balance owing on the HELOC. And in just over 3 years now, I've brought that balance down to effectively zero. And as a result, this is bringing me closer to being mortgage free faster than I had ever thought possible previously. But the coolest thing it did was this. Since I was a good little saver, when the right opportunity came along to purchase an investment property for myself and my wife, we didn't have to worry about the rigmarole of financing coming up with the deposit or the down payment. No, it was very easy to transfer that money out of the equity line and jump on that opportunity when it presented itself for very little cost and almost no headache at all. And that opportunity has paid off by increasing my net worth by more than $150,000 in just 12 months. But the one thing I want you to take away from this is that I do have warnings about getting into this type of product. And here they are. You could end up in a terrible financial position as a result of having access to your future wealth now. And this will put a lot of financial stress on you. And if you have a spouse, it's going to put a lot of financial stress on your marriage. And financial issues are one of the biggest reasons that I help people sell their homes in divorce. So consider that. But the other option is that you may pay down your debt and increase your net worth faster than you ever thought possible previously, which actually can also cause stress on your marriage, because if you're the type of person like me that likes to put away every single penny, your spouse may actually get frustrated that you don't want to spend any money at all on the finer things in life, and all you want to do is pay down your debt rather than enjoying life and, living a little. Let me know what you think of HELOCs down below in the comments. If you need help and you don't already have an agent here in my marketplace of Surrey and the Fraser Valley, you can book a call with me right now down below in the description with just a few simple clicks. Please remember to subscribe, click the like button for good little savers everywhere. Check out another video on the channel before you go, and we'll see you in a couple of days.